Okay, you'll confirm on the other side.
Just a second.
Okay. Welcome, ladies and gentlemen. We've just discovered that the last 15 minutes we were talking, you were not live. So we'll try to hurry up the introductions, but welcome to the Black Business Growth Initiative. Please invite your friends, your associates, your family, all of whom would benefit from us talking about funding for small businesses. And yeah, maybe take 10 seconds to do that while we do our introductions. Now, the Black Business Growth Initiative is a community of like-minded, career professionals and business owners who want to see the growth in their members in every area of their lives, right? We are about professionals in corporate, in academia, in various spaces. And we're also about business owners who own their own businesses and just want to leave a legacy, equity for those who come behind. Now, what we stand for are just, 5 simple values. One is unity and collaboration. And what we mean by that is that there's enough for everyone. We don't have to compete. We don't have to think as a first point of departure as the fact that we have to, see who can win this competition. But all we're saying is that there's enough for everyone. And when we talk about unity, we're saying as Black people, we are the majority. We are a lot in numbers. And therefore, what if we united, we can get so much done. The second one is talking about excellence. And what we mean by that is not perfection, but rather the idea of continuous improvement, continuous feedback, and continuously fixing our mistakes, which is only natural if you're going to learn how to do new things. The third one, as I've said now, it's continuous growth and it's continuous balance growth. In every area of your life, we don't subscribe to the idea that if your career has to grow, you have to sacrifice your health, your sleep, and your family and your relationships. But rather, we are looking for continuous balance growth. Our next value and objective for our members and for ourselves is that of personal responsibility. And what we mean by that is that, at the end of the day, the story of your life is what you write with your own decisions and actions that you take on a day-to-day basis. So no matter what situation you are in, as an individual, as a family, as a community, as a race, no matter who you can blame, at the end of the day, you have to take the responsibility to fix things. So the Black Business Growth Initiative is about us as this community demonstrating that we can do that, demonstrating as this event is an example of that we don't want to talk theory, but we want to talk practical things to help you access funding, to grow your business, to grow your projects, whatever you really want to do and how you want to contribute. So allow me to introduce my panel members. I've got Nomfundo Fakudze, who's with the National Empowerment Fund. Nomfundo will introduce herself just now. And then I've got Philani Mzila, who's a deal maker at Edge Growth. And I've got Shakes Motsilili, who's a chief executive officer and he runs his own company. Panel members, it's up to you now. I'd like you to introduce yourselves to our audience briefly. Nomfundo, let me just start with you. Tell us a bit about yourself and your own personal career and profile. And then maybe tell us a bit about, the National Empowerment Fund, what it's about and what you do there specifically. Over to you.
Thank you, Sazi. Good evening to you and good evening to those who are joining us through streaming and to my fellow panelists. My name is Nomfundo Fakudze. I'm a senior investment associate with the National Empowerment Fund, which is the NEF. I've been in the corporate finance and venture capital space for over 15 years now, having began my career at Absa Business Bank, moved to Investec and the Public Investment Corporation. My junior training is in economics, postgraduate training in business management and finance, and I've got a master's in business administration from the Gordon Institute of Business Science. So I work for the National Empowerment Fund. Who we are is we're an agency of the DTIC, which is the Department of Trade, Industry and Commerce. And our main mandate really is to facilitate the participation of Black business in the mainstream economy. We do this through provision of financial and non-financial support, And on the financial support side, we do this through our 5 specialist funds, which I'll get into at a later stage. And through these funds also, we do disperse and do transactions for third-party funds, which includes the Department of Trade, Industry and Commerce itself, the Department of Tourism through the TTF Fund, the City of Guruleni through the Fetula Fund, and the Solidarity Fund now in terms of the Economic Recovery Fund. On the non-financial side, we're talking about pre-investments, post-investments, our socio-economic development side, and I'll just keep it there for now. Thank you very much, Sazi.
Yo, Nomfundo, that's a lot of words, big words. Third-party funds, empowerment funds, we'll get into it. We'll simplify it for guys, but you know, it's wonderful to learn that you guys do so much. We're really gonna delve a bit deeper into that. I'm looking forward to that. Now, let me hand over to Philani. Philani, a brief introduction as well.
Thank you, Sazi. So my name is Philani. I am a senior deal maker at Edge Growth. By background, I have been in the private equity and venture capital space for the past 9 or so years, managing everywhere from large cap private equity funds at the PIC to venture capital and early stage funds at Edge Growth. In terms of training and background, I have a master's in development finance from Stellenbosch Business School. And really I've been operating, I guess, across the spectrum in the space for some time now. The business I represent, as I said earlier, is Edge Growth, and we have about 1.5 billion rand under management across 6 funds. We are an early stage impact investor, and we look to support majority Black owned businesses and Black managed businesses in the early stage sort of growth journey. In terms of broad ticket sizes, we look to write checks between 5 and 30 million. And we use both debt and equity instruments to try and support the growth of the businesses. So yeah, that's a brief intro on me.
Okay. Thank you, Philani. Yeah, guys, you know, I'm gonna try to simplify it for people out there in terms of debt and equity instruments, right? Someone might be saying, what does that mean? Don't worry, don't step away. We'll unpack all those terms for you so that you can understand. But also, you know, so that we don't try to guess what the questions might be. Send those questions through all the time, okay? Now, Shakes, let me hand over to you so that you can introduce yourself to our audience out there. How are you doing?
I'm good, Sazi. Thanks for having me. I think your initiative is amazing, guys, and I want to thank you for inviting me. I have a background in mainly investment administration, which is where I cut my teeth at Momentum Wealth, which is now MMI Holdings, well, part of it is MMI Holdings. And I decided to be an entrepreneur about 7 odd years ago. And I then created my own fund, which is Alumni Energy Investments, which was well up until recently an approved Section 12J fund. And we don't even have to go into what that is, because 12J ended on the 30th of June this year, you know, which was, well, unfortunate, but it is what it is. We live to fight another day. But yeah, so I would like to think that I am a social entrepreneur and investor. The reason I do what I do is to try and obviously raise capital and obviously find investment opportunities that will actually change the lives of the previously disadvantaged in South Africa. So I'm really keen to get to talking about the subject, which I'm very passionate about, you know, yeah.
Thank you so much, Shakes. Yeah, I was going to ask what is Section 12J, but it's okay. Thank you.
It ended. It ended. It
You know?
ended.
And I think maybe, yeah, maybe you'll be able to tell us exactly your company. Maybe let's start with your company. You know, when you're talking about alumni energy investments, I know you said you decided to start your own company. You call yourself a social entrepreneur, if I can call it that. But
Sure.
you know, tell us, yeah, for someone who's looking for funding, you know, what space? How would you come in? Where do you find your niche, your space of operation?
Oh, so it's not easy to get funding from me. I must be honest about that, because I have first of all focused in a very small subsection of what is possible. So I particularly specifically look for tech and energy innovation companies, and so it's not your buy and sell. So I do get a lot of proposals where people want me to fund them to go and buy goods in China and put a markup and sell them here. So it's unfortunately not what my mandate is about, you know. So you need to be coming with something new, very different in the tech and energy sector. And it's a very difficult box to tick. So I'm just mentioning that amongst a lot of boxes, you first have to tick that box. You know, so it's tech and energy innovation. So innovation has got many faces, you know, but you need to be coming with something that is not existing at the moment, doing either a process differently or a new product, or we can. I'm not going to spend too much time on what innovation is, but if you tick that box, that's just the first step. Then we can go to the other stages. But if you don't tick that box, you know, you're immediately out. You know? And I think the point there is that I'm a drop in the ocean. You know, we need different, funders that will cover the other sectors. It's impossible for me to have a mandate that's larger than what I'm looking at. You know,
so Shakes, let me cross over. You know, I think that's a very interesting point. And maybe Philani, from your side, you mentioned the size of the people that, you know, or the businesses that you would fund, you know. Now, Shakes has brought on the idea of saying the kind of businesses that you fund. Do you have any, specification of what you would fund, or is it just anything that makes sense to you?
Yeah, so we are a sector agnostic fund, so we don't have a particular preference in terms of industry, but I'd say we do have a skew towards financial services, industrials, education, the green economy, and sort of tech.
Okay, so an example of financial services would be?
So one of the programs we run, we invest in stockbrokers and asset managers. That's one of the mandates or allocations that we work with, which is backed, or rather, which is part of the fund that's backed by ASISA, which is the Savings Association.
Okay. And Nomfundo from the Empowerment Fund?
So I think I mentioned earlier that our mandate is to fund Black businesses. And when I mean Black South African businesses, as defined by the codes, the Bbgi codes of good practice. So you must be a South African citizen. We look at funding across different sectors. We're not sector specific. We have 5 specialist funds, as I've mentioned. I'll mention all 5 of them with Imbeu Fund. They primarily fund procurement and franchise funding, and they look to fund from a minimum check of 250,000 to 15 million. And then we've got Umlotto Fund, where I reside. We look at more your vanilla transactions, bigger size checks within the National Empowerment Fund. And our products are acquisition finance, expansion finance, and new venture finance. We look to fund from 2 million to 75 million. Then we've got the Rural and Community Development Fund, which is a fund that funds businesses in rural areas that have a community trust or a community element to them. They look to fund the same products as Umnotho Fund, which would be acquisition, expansion, and venture finance funds. And they look at check sizes of 1 million to 50 million. Then we have the Strategic Projects Fund that funds your early stage businesses, but primarily in the industrial and manufacturing sectors, and they fund up to 75 million. Thanks.
What's the minimum there? 75 is the maximum, right?
Yeah, so you can look at if it's a feasibility, 500,000, we're not prescriptive. That's why we say up to, because it's early stage. So it starts from seed capital, from a feasibility study, and then it grows where you reach financial close.
All right. No, thank you, guys.
Sorry, can I just say, just add on that, because the info that has just been shared is amazing. In addition to what I've shared about, my specific focus and mandate, that I also look at funding pre-revenue concept stage startups. It's a very important distinction of what I do, right? So I fund businesses with zero track record in terms of revenue production. And I mention this because it's such an important space where there's almost no players at all. And I think there's a huge need to send funds into that space, So of course, there's a reason that money doesn't go there. The probability of failure, in that space traditionally is so high that more often than not, it doesn't make sense for VCs or, funders to actually even consider going there. But it's almost, for me, the chicken and the egg issue is that if we actually spend enough time and effort looking at especially high-end innovations that are concept stage and what they could potentially do at that stage and give them the necessary support. And I'm not talking only financial, but I think the funding space, it's not about just giving money. You did mention non-financial support, which is such a critical element, So one of the most important features of being a fund manager is to handhold your entrepreneur, whoever it is that you support. So you don't just throw money at and say, okay, I've invested and that's fine, and it's just a paper transaction. You invest in the business and invest your time, blood, sweat, and tears, and you unlock problems. You guide the business to success, as it were. And I think the numbers that have been traditionally communicated about the level of failure that early stage startups experience is because of the lack of the hand-holding aspect, the support that a funder is supposed to provide to that business, to actually get them to a point of success. And I think this is so relevant to the conversation today. We said it was funding, but I think it's support of Black business. It's to say, all right, if someone has an idea and there's funding mechanisms and institutions, how do we ensure that these businesses actually succeed?
And Shakes, the point that you're raising, right? The work that I do, I'm a business coach, right? So I actually work with a few funders, especially precisely around that area, because we say there's a failure rate that is high, and the issue is not just about the funding; it's also about the support. It's also about the skills development. It's also about the transfer. It's also about helping people to manage this money, because for some people it's a psychological shock, when they suddenly have all of this money. And then many of us will know the stories where someone, wins a big contract, and then tomorrow they are driving a big car, right? It's things that we laugh about from time to time, whether we all experience it, whether it's prevalent or not. But, those are things that in my work I found. But I think also the other question that I have, right? And I'm just looking at the numbers that you guys are talking about and the point that you've raised, Shakes. At what point would you look for funding, right? So for instance, if you talk to most people, the idea that they have a business that can be funded from, let's say, what, 1 million, is there for them, right? They just need 50,000, 100,000. You understand? An experience that many of them, when I talk to them, have is that then I get sent to CEDA or something, but they're going to want to do a business plan, or they're going to want someone to do marketing or pamphlets or banners or something like that. Okay. So for someone like that who's watching, says, no, I just need 100,000. I've got chickens. I want to grow my chickens, right? I want to get started. I have nowhere to get started. How do we help someone like that? Because we are dealing with people at all stages in their, and I mean, I haven't even started talking about the person who's got a concept in their mind, right? And they just need someone who's gonna buy into that idea. But let's start with the small guys who says, you know what, I don't need a lot. I've always grown up in a farm. I just want to grow chickens and I want to sell them. There are people who always want to sell chickens. They don't have to travel to town to get chickens. What would we say to that person? Maybe let me ask Nomfundo.
Amazing question. I'm intrigued.
Thank you, Sazi. I think government does have different spheres of sources of funding. So when you look at CEDA, they will assist you with a business plan, with marketing, with the non-financial aspects of funding. And then there's CFA that then carries the checks from the smaller 100,000s, which is below the NEF minimum threshold. And then you've got the CFAs that would do that for a person that would require 100,000. However, they will require a business plan. You have to communicate with your funder. You need a business plan. You need a financial model. As the NEF, we have invented this business plan toolkit, which is on our website, where a person such as someone looking for 100,000 and doesn't have money to spend on a business plan could input whatever necessary information about their business. They'll input their numbers. The financial model will ask for how many chickens are you selling per day, at what price, how much are you buying your feed, at what cost. So already you've got your GP line, you've got your revenue and cost of sales, you've got a GP line. How much are you paying your staff? How much is it rent? You can input those things, and that's in our 7 African languages. So you can interact with that. And you don't need to be a National Empowerment Fund customer to utilize that fund. You can use that toolkit and go to CFA, go to business partners, to the banks, or whichever funder you'd like to go to. But we do have different spheres from CEDA to CFA. Then you come to the NEFs. Then there's the Industrial Development Corporation, DBSAs, and the PICs. So from a government perspective, we do have that facilitation. It's just that people just need to research and maybe Google more. I feel people don't research and do their homework as to what are the different funding initiatives that are out there. It's on the net. You can Google it and find it, actually. Thank you.
Nomfundo, yeah, there are people who are fighting with you right now. But the thing is this, and I'm gonna, maybe Philani has got something to add as well. And really the question that we are answering now is to say, well, when you are considering whether a business is viable or not for you to put money in there, what are the key ingredients that you look for? Some of it might be paperwork or systems. Some of it might be, maybe the person themselves. Some of it might be governance structures to say, are they running the business by themselves? Is it registered with the CIPs? What are the kind of things that you'd be looking for that, you say, this is the recipe that we've seen normally gives an indicator of success going forward?
Sure. I think from our end, as I mentioned earlier, we sort of provide growth capital to businesses. So we need you to have been in operation for a bit of time, sort of 3 years or so, and be doing a minimum, I'd say, of about 300,000 Rand a month in revenue. So we'd come after your CEDAs and CFAs and maybe your NEFs. In terms of key ingredients that we look for, we like to back teams, strong teams. So a collection of guys that are passionate about the industry that they're operating in, and have a certain level of expertise in that industry, and can sell products in that industry. We look for businesses that have some level of product market fit. So you've developed a product or service and you've been able to sell that to your customers or clients. Yeah, I'd say those are the two main things: strong team, product market fit, track record in terms of time being around, and track record in terms of revenues.
Oh, wonderful, wonderful.
Nomfundo,
from your side, anything to add to that? Shakes, I'll come to you just now,
okay.
Right? Because
sorry.
From your side, you also wear the hat of an entrepreneur. Okay, yeah, you also wear. So I want to end with you, Nomfundo. Anything to add to that? Just, what do you look for? What are the key things that you look for? You've mentioned some of them. Philani has mentioned some of them.
Yeah, I think one that Philani has mentioned is backing the jockey. For us, it's quite important that we're backing the right person, a person that will demonstrate the right skills for the industry that they're going into, the right experience, the right technical expertise, because we have the benefit of a book where we have seen the weaknesses in the entrepreneurs that we have funded over the years. So strong entrepreneurial assessment for us is key, so that we don't have entrepreneurs that will get a 10 million check and go and buy a car. Another thing is understand your business model. What are you offering? Is there a market for it? Do you have security of that market? Do you have security of supply? And do you believe in that business yourself? Are you the first one to put in skin in the game? We call it skin in the game. What have you invested in that company? What do you have to lose as an entrepreneur? So you can't come to us asking for 10 million when you haven't even invested 100,000 in your own business, for instance. So skin in the game for us is important. And yeah, just demonstrate your proof of concept. Yeah, as I've spoken, it's demonstrate your market, make sure that the numbers that you are projecting are numbers that you can speak to, and the source of that, the source of information to back those numbers. Because more often than not, we find entrepreneurs that will project numbers that are pie in the sky, and when we ask what those numbers are backed by, they can't follow through. I think what entrepreneurs need to understand is that the funds that we offer are loans, and these are taxpayers' money from an NEF perspective. We are self-funded. The state is not funding us anymore. So it has to be sustainable, so we fund more Black businesses. So for us, it's quite important that you can back your numbers so that we ensure that our loans get repaid. We do not extend any grants as the National Empowerment Fund. Thank you.
Thank you. And just a quick follow-up question. When you say those numbers have to be backed, like what does that mean? What would be a reliable source of backing for that information from your side? If you were to ask me that question, say, well, are those numbers backed? What kind of answer would you be expecting?
So if it's a new business, the numbers would be backed by a proper market study that will delve into the number of what's happening in that particular market, who are the players in the market, the size of the market, and how you're going to grab that market. If it's an existing business, then we look at historical financial information and see how you've been performing on a historical side. And then if it's a contractual based business, then we look to fund businesses that will then cover the horizon of our loan. Those contracts should cover the horizon of our loans so that we can ensure that there's affordability.
Okay. So if you've already been operating, you want financial statements at the very minimum, right?
Yeah, so we'll request audited financial statements for probably 3 years and the latest management accounts. Then we'll see how the business has been operating, who the clients are, how they relate or how they contract with their clients. And then it's easy to then extrapolate that information and have your financial forecasts that are meaningful.
Okay. No, wonderful. Thank you. Shakes, let me come to you on this topic here, right? To say, well, what's a good indicator of success? When you're evaluating someone's business, what do you look for? We've heard about the right team.
I think I'm
skin in the game.
Yeah. So I look at I look at my potential opportunities, maybe the other way around. But remember, I understand we are at different stages of almost the life cycle of a business, so it wouldn't be the same size, So for me, because as I mentioned in the beginning, because I go for almost early stage businesses, almost pre-revenue concept stage, right? So I first of all go and look at the impact a particular innovation will have, the social impact, So I look at a person who has on paper an innovation, I evaluate the validity of that innovation and the impact that that innovation could have, and to solve some social ill or need, So I work backwards, which is different, and it's understandable that my fellow panelists wouldn't operate like that. Remember, because they need to have a track record. They need to see certain things. I'm talking about going before all of that, right? So I go and find, a guy even in varsity, or just out of varsity, that has come up with a stellar or cracking idea. A guy sitting in the location, something totally new that doesn't exist, and they just have it on paper. It's an idea. And then I will work with them to then convert that idea to a business plan, to proper financials, to a proper business model that's viable, to et cetera, So as an example, I'll talk about one of the companies that I support, which is in telecom. It's called Africanopy. I mean, when I started supporting Africanopy, which was a then totally concept stage, they didn't have a license from ICASA. They didn't have anything. They just had an idea, right? An innovative idea. And it took years, me working with them to even get them and unlock for them to apply and get an ICASA license to start operating. There are a lot of successes at the moment that Africanopy has achieved, but we're still on a long road, So my model is very different to your traditional funding model. And I suppose, if anything, that I would like to leave today is to say there is a need, I suppose, to look at almost your earlier stage businesses. How do we support those type of businesses that actually can impact society more? And it's maybe to plant a seed to say, is there something that I understand what was said about the CFAs, et cetera, but the reality is that people across the country are frustrated. I am overwhelmed by people wanting assistance from me because they know I go earlier on. So although those structures may exist, the need is far outweighs what they are able to do. There is a huge gap. And then I think we mustn't always put perhaps the burden on government. I think the private sector can do much more to go earlier in to those type of opportunities and try to push, job creation. Because remember, you support your entrepreneur, you create jobs. We've got one of the worst unemployment rates in the world. What you want is to support your entrepreneurs who employ, not big corporates. You want an entrepreneur that employs 5 to 10 people and gets a viable business going. And that's how you deal with your unemployment issue. And I think the main thing today for me is that if we understand what funding issues are and where the focus must be, is to go and look to your smaller type of entrepreneur, the guy who just wants, as you're saying, to run a very small, tight shop, but has a very good idea and model. And to be honest, will probably employ 6 to 10, 5, 10 people, and then, but still be pushing. And remember, in South Africa, it has been proven, one employed person probably supports about 8 other people. Has got about 8 dependents. So if you create an ecosystem that generates a lot of your smaller type of entrepreneurs, not your big businesses, you know, but your smaller type businesses, you know. And the reality is that, and this is from a very good place, and I've said it in the past, I think especially the VC space, the venture capital space, and I'm talking private sector now, has become quite lazy, you know, because they actually want proven business. They want to invest in proven business. Their risk appetite is so low. And I think it means that there's no money that goes earlier on in the trajectory of businesses. And these are some of the things and the discussions we need to have to say, when VCs traditionally were created, you know, they're not PEs, they were created to have the stomach for a little bit more risk, you know, and to come in a little bit earlier on. And this is not a South African phenomenon. This is a global phenomenon. They've become a little bit less risk, you know, their risk appetite is lowered, as it were. And what it has meant is that it's created a huge gap in actually promoting new businesses and new opportunities. So literally new businesses, if you're starting your own business, there's the concept, the triple Fs, your friends, family, and fools. That's almost only where you'll get money. You have to fund yourself, get money from your friends, your family, or fools, but you have to have your business operating and actually producing revenue before you can actually attract any money.
And Shakes,
financial banks are not even an option. But anyways,
if I may come in, right?
Yeah.
You know, what I'm understanding you to be saying, you know, and this is just my experience, and I don't know, I think we were talking earlier and I mentioned an example, you know, when I was looking for my first job, you know, everywhere I was going, they were saying, well, we're looking for people with experience. And I said, well, where does one get this experience? It seems like they just want to come and harvest, but no one wants to plow, right? And I guess for me, it's about, you know, just the value chain, saying, well, if I go to a high school in grade, is it 8, standard 6, right? They're gonna say, no, our feeder school is over there, right? Before you come here, you have to go there. And when I go to the primary school, they might say, oh, you need to go to creche or whatever. But there's a starting point that funnels people through. And my question, I guess, is, you know, between you guys who take it at this point, and let's say your CFAs, right? Is there that flow, that communication that says, CFA, let's see what your numbers are looking like because you are our feed? Is there that kind of conversation? And maybe Philani, I haven't really explored the dynamic to that extent, but if it's, you know, I assume it's applicable, that question as well from your side. Is there that value chain, that feeder system that you know that this is where the younger people or the smaller businesses, where, you know, in terms of money, you know, if you put in 50,000 and you lose it, you know, before it becomes a substantial thing, you might have to lose 10 of those, we understand, you know, so you're really looking at the viability of the idea. And also the idea of looking at someone and saying, this person, they've got an idea, they might not know about business plans, they might not know about, you know, they might not have a technical piece of paper, but this person has been plowing their whole life. You understand? It's not just paper knowledge, but it's the practical knowledge, you know. Is there something like that you guys, that is in place or that you guys could consider?
Yeah, I think from a private sector perspective, the predominant mechanism is accelerator programs. So typically you'd come up with your business concept, start operating maybe for a year or so, and then go into an accelerator where they'd assist you in terms of ticking all the boxes that we need in order to invest in your business, be it getting your POCs in line, getting your product market fit in line, building a team, that sort of thing. So that's sort of our major feeder. But I do agree with Shakes to say that we do need more investors that are going into the earlier stage, that are sort of supporting those earlier stage businesses. I do think there's a lack of capital going into that space.
Okay. And Nomfundo, from your side, is there a conversation that you have with the CFAs and CDAs to say, guys, you're not bringing enough people, you know, you're not, or whatever the case may be, or just an assessment in terms of having a conversation, being part of the same value chain? Because the way I see it, they're almost like your crash or your private schools. The way I see it.
No, they're part of a value chain and an ecosystem. I mean, it's an ecosystem that works. We all know one another. So we all refer deals to one another as deal makers. So, and as DFIs. So we do have that engagement, and we do participate in programs that a CEDA would have, or a CIFA would have, or the National Empowerment Fund. We have the discussion, and we don't work in silos, as some believe that, you know, it's fragmented and government does not speak to each other.
Oh, no, that's great. So if someone came to you and you say,
I must say,
Shakes.
I must say for, you know, that I remember attending, and unfortunately I don't want to name names, but I attended a session maybe about 6 years ago, 5 years ago, and someone quite prominent, you know, had an opinion that government is doing nothing, you know, and I was very taken aback about that, you know. I just want to say I agree with Nomfundo about how there are a lot of initiatives, you know, from grants, etc., that you know, are available, you know, and people, unfortunately, it is a reality of the society we live in that a lot of our community doesn't even have access to the internet to Google and research, and some of them don't even possess those skills. Now, it's easy for me to go on the net and see what's possible and have a look at, you know, what are the avenues that are there. You know, I think the main thing, if there could be anything said, is that we need to think about how we can be maybe a bit more proactive in going out to seek maybe some of these entrepreneurs that, remember, I'm really a big believer in that. If you go into societies, rural areas, townships, etc., then the people that have the solutions to uplift those communities are within those communities. And I think we as government can go into those communities and go into those areas to identify who these people are and give them assistance. So I'm just saying it's something, I'm planting a seed in a way to say we can maybe try to be a little bit more proactive, because we have a crisis in our country, you know, with the riots that happened earlier this year. And if you look at our ever increasing unemployment rates, our youth unemployment rate is something else. I don't even want to mention that. But the point is that to curb all of these challenges we have, unfortunately, we need to be thinking a little bit more aggressively in terms of interventions. And I think going in and seeking out who are actually the people that are trying to make difference within their communities and coming and embracing those people. And remember, these are not the people that are going to be requiring big ticket sizes. That's the honest truth, you know. So these are guys that are going to be needing 20,000, 30,000, and they're going to be needing a lot of assistance. And I agree, I know the organizations we represent, this is way outside of their ticket sizes, but we are talking about the Black Business Growth Initiative, and we're talking about funding that is relevant for Black business. And I have to talk about that. And I'm saying we need to go and seek out, you know, I had thought of an initiative as an example where I wanted to have literally as an experiment, you know, unfortunately, look, it's something that I had in mind where 10 tickets of 50,000 into a particular township, have a rigorous selection process, and then have a proper team supporting those 10 opportunities. And we see what happens, you know? And I'm saying even if 3 of those 10 succeed, that's an amazing feat, you know? And these are some of the things that we sort of need to be brainstorming and thinking about.
Wonderful, Shakes. Thank you so much. And, you know, I think we might have covered this question already, but I'm just asking from the other direction. What are some of the mistakes that we see people who are applying for funding making that actually, you know, in a way, get in the way of what they are trying to get, you know, what they're trying to do? And here we're just giving people advice. You know, we've talked about what they should do, have a business plan, you know, have your financial information in order, have a team, that's capable, invest some of your stuff before you ask someone else to invest theirs? What are some of the things that people should avoid doing? And some of the things are earlier on, right? Maybe in terms of how they set up their businesses or things like that. Nomfundo, anything?
Thanks, Azi. Yes, of course. What we see from our side as a National Empowerment Fund is largely insufficient information. If you are going to send your funder insufficient information, haven't seen the requirements, it becomes a back and forth and it takes longer and people get tired in the process and they think that, we're not coming to the party to assist them. Another thing is packaging, knowing your audience, right? Research about the different entities. As I said, we fund Black businesses, you've got the IDC, the DBSA, etc. You can't come to the National Empowerment Fund with a business plan that's written DBSA and you're looking for 2 billion rands. That's what we see on a daily basis. Another one on the entrepreneurial assessment, lack of industry knowledge and know-how is a big problem. And that's where then we'll get unrealistic projections and unrealistic sort of like expectations from people that are not in a particular industry, are not involved in a particular industry, are not networked in a particular industry, and they're not benchmarked revenues, margins, etc. of that particular industry. Another one where we big on acquisition finance is that we get these transactions that are overly valuated. And when it's overvalued, you look at multiples of 100 times and you're like, even the stock exchange is not performing at that level. And then a major one is lack of operational involvement. If you don't have the time for your business and you want to be passive, that is a major problem because then you do not have the passion and you're not an entrepreneur. Be operationally involved in your business. Know every single crass and nook of your business. Know your business. Thank you very much.
I think that's some good advice in terms of people who are looking to, talk your language so that they can prove their case. Yeah, I think that's very good. Philani, from your side? Any don'ts?
Yeah, I think Nomfundo's spot on 100%. I think we have the same challenges as early stage investors. I think just to add on to what she said, it's very important, as much as funding is a need to grow your business, it's important to not rush the process. So there are, I think, lessons that need to be learned at earlier stages of a business, which will put you in a better position to sort of fund the future growth and the success of your business going forward. So put in the time, put in the effort to sort of grow the business, and don't rush the process. I think a lot of people try sort of look at a business and try emulate a business that's 10 years old and try raise funding according to a business that's 10 years old, whereas they've been operating for 6 months. And as institutions, it becomes very difficult to sort of back those sorts of ideas. So yeah, that's it from my end.
No, thank you. Shakes, anything to add to that?
Yeah, I think my fellow panelists have covered most of the challenges that I also experienced. I think I want to say professionality. I think if you're going to ask for money, the proposal needs to look professional. And, you need to take care. And I know it sounds very, it may sound very small, but I mean, you want it to be, typed correctly, the English to be correct, with respect, and the numbers to make sense. And I am a numbers person, and I always tell people that when I see round figures, I'm always scared, So it's like your thumb sucking. When I see someone saying I need 2 million, and I say, okay, break it down, and everything is round numbers, and then I say, if you actually spend the necessary time to display to the potential funder that you've done research of what the actual costs are and the costings properly are, and you spend time on your forecasting, etc., etc. That gives confidence, because if I interrogate why you say a particular cost is 60,000 and you're unable to answer that, already I lose faith and confidence in your whole proposal, So I think what I would give is a really big advice to any entrepreneur who wants to apply for funding. Be as truthful as possible. I always say, a viable business is a break-even business. When you write your business plan, forget about profits. I'm talking now earlier on. Just write a business that's viable, that can pay its costs and be a going concern. So don't put fat into the costs. Give the actual cost of running the business to make it a going concern. You can expand and convert it to be profit-making once it's up and running. These are basics, I believe, of business 101. But people want shortcuts. They want to make profits from day one. And that's not how you start a long-term viable business. Create a business that can support itself, a break-even business.
Wonderful. Thank you so much. Guys, we started late, so we are over schedule, but I'm going to ask Uzola to come in with some comments and questions. I hope you've got something to write in case we've got a few of them. Zola, are you there?
Yes, I'm here.
Sure. Go for it.
Okay, great. I have quite a few, so I hope the panelists have a pen and pads just to write them quickly. The first one is to.
Can you give me 10 seconds to get a pen, please? Ne?
Okay,
10
I'll
seconds.
finish with you.
10 seconds.
I'll finish with you. The first one is to Sis Nomfundo. Question says, do you find businesses in the tourism sector? That's question one. Another one for you, Nomfundo, is from Bongani. Says, good day, everyone. Bongani here, MD of Bankability. I just wanted to know, how is the NEF addressing the issue of turnaround time? I often take projects to NEF, but due to unsustainable turnaround time, I find it much better to go to private sector. What is that? We can't get results from the NEF within a 14-day period. The last time an investment analyst at the NEF explicitly told me that they will only be able to look at it after 12-week period. So one is, are you guys funding the tourism sector? Question number two is the turnaround time in your business, Sis Nomfundo. That's your questions. A quick question for Philani is, and I think this one is also for Shakes, so I'll just read it again to him, is that it says your investment, is it money for equity with an option to buy you guys out at market value when that time comes? So you give your potential investees that option to say, after a certain time, can they buy you out? And yeah, I think that's the one for you. And I'm not sure if Shakes is back. Shakes, are you back?
I am.
Okay, thank you.
I'm hearing you loud and clear with a pen in hand.
Okay, that's good. I think for you, many comments. People are saying, Shakes, you're spot on. We used to have such sessions in Soweto, but they ended up being a talk shop because of the funds never flow towards the people they need that need the funds. I think that's what they meant to do. I meant to say. Another one is sorry, there's just way too many. I'm just trying to summarize as many as possible. One says, do we have an ecosystem or hub similar to the likes of Silicon Valley, which enables specifically Black entrepreneurs in the tech and energy space to grow, thrive, and generate valuable innovation or innovative ideas? So those are yours. The first one is a comment that there was something like that was happening in Soweto and it disappeared. So is the hope that the NEF and maybe Growth Edge can invest in you, or can you guys have a conversation to see to it that you find or create such platforms where you find these small township entrepreneurs that need not so large tickets? And number two for you, Shakes, is that is there an ecosystem or hub similar to the likes of Silicon Valley, which enables specifically Black entrepreneurs in the tech and energy space to grow, thrive, and generate valuable, innovative ideas? That's all for now. Thank you.
Can I go? Sazi, can I go?
Yes, please go.
Okay. On the tourism question, yes, we do fund businesses in the tourism sector. We've just recently launched a boutique hotel in the Northern Cape in Kimberley called Nare Boutique Hotel. So yeah, it's within our ambit, and we are in partnership with the Department of Tourism through the Tourism Transformation Fund. So we do have large appetite for transactions in that sector. On the turnaround issue, I think we do state that our turnaround times from application to disbursement would take a maximum of 3 months, depending on the size of the transaction. You need to appreciate that, as for instance, in my fund, we've got investment professionals that are probably 10, a team of 10. And when you look at Black business, you've got millions. I mean, these applications come by the droves. So it does take a while, unfortunately for us. We don't have an automated system like the banks do. We just receive transactions from walk-ins, from emails. I receive transactions from my networks, but it does take a while, and unfortunately, up to 3 months it is. And then on the issue of the other investment associate, I'm sorry, I'm not here to answer questions of what other associates and engagements they've had. I think the rule is that up to 3 months, although recently we have been involved in the Economic Recovery Fund with funds that have been allocated by the DTIC. So we've been concentrating on transactions from the looting and the vandalism that happened during the riots in July. So we've been putting money into that space in KZN and Gauteng. We had an allocation of 250 million, but we've actually gotten, we've surpassed the 250 million mark, and we had 700 million. So we are dealing with a lot of, pipeline, and unfortunately it does take a while, but it's something that the Minister Patel and the CEO would look into. They were talking about it today. We had a media briefing on this Rights Act because we had, entrepreneurs that were complaining about the length and the amount of information that we require from our entrepreneurs. Thank you.
Thank you. Philani, on your side, anything?
Yeah, so on the question of equity and being able to buy back your equity, I think we are very flexible in terms of the instruments that we can create to fund businesses. So on the debt side, I mean, we go from pure term debt to term debt with revenue sharing if it's sort of a higher risk opportunity. On the equity side, we can look at convertible notes and sort of redeemable structures. So very, very flexible. Simple answer is yes, we can be bought out at market value, and we'd structure that when we go into the transaction in the legal phase.
Thank you. Shakes?
Yes, Sazi. I hope you guys can hear me.
Yes,
things have sort of frozen on the side. Can you hear me? All right.
Yes.
So the first bit was a comment, but I suppose I can also add to that. I'm not aware of an ecosystem that specifically is looking at sort of a Black business Silicon Valley development, type of outlook. I will be honest, I do think that, as I said earlier, there's a huge scope and opportunity for funders to come in the space to focus on Black innovators, especially in tech and energy. And I have to say, because I am, as I said, just a drop in the ocean, I've received some stellar proposals that I've been unable to actually fund. The reality is because I am just, one, with limited budget, etc., and resources. I think there are a lot of extremely smart innovators, Black innovators and entrepreneurs that have come up with amazing products and opportunities, services, etc. There is definitely scope for something like that, is my perhaps addition to the comment. I'm not aware that it exists. I think it's something that we must apply our minds, and I am actually starting to think a bit about it ever since the comment was raised, to say, what can we do? I am a player in the space. Can we create something, maybe even with the Black Business Growth Initiative, to create something like that, that looks at something that's a bit structured to try and support, energy innovators, because the future, and then I'm not saying other sectors are not important, but the future is energy and tech. That's where the future is. And that's where I think if we need to solve the problems that we have, that's where we need to focus on. And it's an intriguing comment, and I think that's what I have to say about that. I think it's just maybe sparked a thought in my mind. I need to spend a bit of time thinking about that. Yeah.
You know what?
Yeah.
In my mind, I have the feeling that we are going to have a part 2 and a part 3 and a part 4 of this type of conversation, because I can tell you now, the people that I coach, the people that I work with, there's a big frustration, right? And I don't think we're even going to have time now to talk about the post-investment support in terms of saying, when someone has the money now, they've got a good idea, and that's all they might have, right? They don't know necessarily they have the skills to run a business. They might not be good at selling, You'll be amazed how many people I find with very good ideas that I'm like, I wish I had known about you 2 years ago. You understand? But they don't even understand the concept of marketing, or where to market, or how to market. You find some people wanting to do everything themselves. You find people, as you're talking now, Philani, about the pre-contracting stage, who enter into deals, they sign contracts that they don't understand, and later on it catches them out. You find people who go into partnerships as friends, and then, at some point, you give them funding, it looks like there's a lot of money, and suddenly, not only does the business end, but the relationship ends as well, So there are many issues, but what I'd like us to do now is just closing statements. I'm hoping that, if we ask you to come back again, you will be able to do that, and you'll be able to also, some of the people that we spoke about today, which are almost like, a black hole that we want to explore, whether it's the CFA or the CEDA, just to make sure people understand the entire system and the value chain. Where do I fit in, and how do I access this? But please, just closing statements, 1 minute, so that we can release our audience, and so that we can go back to our after hours lives. Okay. So Shakes, let me start with you.
Okay, thanks, Azi. I really believe that our motive as players in the funding space needs to be driven by the concept of impact investing. So we need to get to a stage where we don't only invest because we're looking at the return or the profit that will be made, but it is a combination of the impact that that business will actually do to improve the society we live in, improve the lives of the majority of South Africa that is living under very difficult circumstances. And I think some people coin the term ethical investing, impact investing, things like that. But I think just for us to think differently about the businesses we support, the type of business we support. And I think it's beyond just making a profit. Of course, you've got shareholders that you're accountable to, you know? And I think we can find a balance where we invest in businesses, but we also invest in improving the lives of the previously disadvantaged in our country. That's my final statement, I would say.
Thank you so much, Shakes. I think that's inspiring. Nomfundo?
Thanks, Chair Shakes. I think that's why I left the corporate world and went to work for government, well, for a development finance institution. So what wakes me up at night is seeing these entrepreneurs, hand-holding them and getting them to a point where they're over the hurdle. They receive their money, they're running their businesses. We're giving them mentoring in terms of marketing or financial assistance, and they employ people. That's what we are for as the National Empowerment Fund from a developmental aspect. For us, it's creating capacity in rural areas, in provinces that, you know, like the Northern Cape, that don't have much activity happening there. So as in my scorecard would then include areas such as the Northern Cape, Bloemfontein, so that we just create capacity in those areas, especially in Black communities. So I think this session is not enough, because I believe that we need to school our people when it comes to capital raising and financing. We use this jargon that, you know, scares people from even applying for funding. So we just need to demystify capital raising, make it easy for people to understand, and then we will get quality pipeline and we'll grow this economy and create jobs. Thank you very much.
Wonderful. Philani?
Yeah, so I think from my end, it's just a bit of advice to entrepreneurs. I think spend a lot of time sharpening your axe, fail fast and fail cheaply. I think there's a lot of sort of time that can be spent at the very early stage to perfect, or not perfect, but significantly improve your business idea and your value prop, and how you position your business in the market, so that by the time you come to funders and you're raising capital, you're pitching the businesses at the right level to the right investors, and giving them the right information to make the process as smooth as possible. So spend a lot of time researching, sharpening your axe, failing cheaply, and yeah, by the time you sort of look to raise external capital, you have a story that makes a lot more sense.
Thank you, Philani. And I mean, you know, if I think about the session today, there's been a consistent theme, and that's just about educate yourself, educate yourself, educate yourself. Do your research, so that when you stand in front of someone you want to fund, you instill confidence in them, in your ability to do what you are saying, in the amount of mental work that you've put in before you go into that, but also an acknowledgement of the amount of support that is still needed for people, you know. And the idea of saying fail fast, fail cheaply, the idea of saying it's not just about money, it's about also supporting the people that we fund, but it's also about making sure that we also look at the social impact of this funding, because it's not just a profit-driven you know, initiative, but it's a passion to see small businesses employ a few people there, but it all adds up. And it's also about ensuring that we don't have that missing middle, you know, of having a proactive approach in terms of going to the places where the people who know about the spaces that we want to impact would have the easiest traction and would have the most amount of knowledge in terms of how to do things for impact. But we might support them in terms of the technical and the business skills. Shakes, yeah, that's, I see you've got your hand up.
Yes. Saz, one last thing, and it came from Philani's statements. And I think I didn't mention it. It's really a one sentence. Again, I must add that there's different types of funding that's relevant at different stages of a business. So do not think that all types of funding are relevant at different types of stages. So I want to say to the entrepreneurs that are listening, to be honest, you must put your skin, as it were, use your own money and things like that to run your business as far as you can. You know, get your idea of business to almost as far as you can before you ask for money. And the reason is simple. If you can get your business almost operational, or your idea quite robust, you are able to get your funding cheaper than you are if you go before that stage, which means you're going to have, if you go for equity funding, you have to give away more of your business than you would otherwise. So the point is, I must impress, entrepreneurship is not easy. It's not for everybody. And if you go into it, you must know that it's blood, sweat, and tears, sleepless nights, and. And the point is, do not rush to look for money. That's what I wanted to say. And when you do need or go look for money, look for the right type of funding, right?
Okay, thank you guys. I'm gonna close it there on that very sage note of advice, you know, and that's, I think it's a very important point. Ladies and gentlemen, our audience out there, thank you for joining us today. We will be having our last event for the year on the 23rd of November, 2021. It is a Tuesday. And our idea is that we want to make it a face-to-face. We are in Cape Town right now. We want to make it a face-to-face, but we will be streaming live as we are doing now. So we will be securing a venue, and that is assuming that lockdown level 1 stays with us and that things don't change for the worse. So stay responsible out there, stay safe, take care of yourselves, take care of your loved ones. I'm of that school that says go and vaccinate. I know some people don't agree, but I would encourage you to do that as well. And to our panelists, thank you so much for coming to represent your companies and your institutions so well. Thank you for the passion that is clear in how you talk about funding of small business and the impact that you feel you are having and the contribution you're having in the country, in society. So thank you so much for you all. Have a great evening. We were honored to have you. To the Bbgi family, to the team, thank you so much. Good night.